Hello everyone, Chris LaChava with Remax Heritage Professionals, and in today's video I want to talk about the concept of a mortgage buy down. This is terminology that's being used a lot in the real estate market recently over the last year or so since mortgage rates peaked at over 8%. They have started to come down, so we might start to see this go away a little bit. But essentially, what is a mortgage buy down? What a mortgage buy down is there's basically a 3-2 buy down is one of the more common ones. 3-2-1 buy down basically is it reduces the loan interest for the first 3 years of the loan term. There's also 2-1 buy downs, which would reduce the mortgage payment for the first 2 years of the loan term. But let's just do a 3-2-1. So for the first year, essentially the buyers would be having an interest rate 3% below whatever the prevailing rate is. So if the prevailing rate was 7.76%, the first year they would be paying 4.76%. The second year, it would go up to 5.76, thus 2. And then the third year, it would be 5.76. One of the biggest advantages to this type of a program is that it allows buyers to have a little more buying power because their monthly mortgage payment is significantly lower because of the significantly lower mortgage rate. And then when mortgage rates actually go down, presumably they could refinance. So they might never pay the 7.76%. And in this scenario, I think it's likely they would be able to refinance to a much lower rate. And so they might have 4.76 and 5.76, and they might not actually pay any more than that by the time the third year rolls around. Oftentimes, this is paid by the sellers as part of the closing costs, or builders often will buy down the rate. And so that can really be a huge benefit. And as I said, we see mortgage rate buy downs happen a lot more when mortgage rates are high. When mortgage rates were at 3%, we didn't see these at all. They were non-existent. When they got up over 6% into the 7 and 8%, we really saw these come back, and we actually saw a lot of sellers. In fact, I had sellers that are currently offering it. They're offering a 2-1 buy down, and they're offering that as part of the listing price. So they have their listing price, and then usually in the comments they'll say sellers are willing to pay assistance towards a 2-1 buy down. The cost to a seller will vary depending on what the buyer's qualifications are. But if you talk to a good lender, they can give your seller an idea of what the most it would cost to do a 2-1 buy down, for example, for the worst case buyer, so to speak, in terms of their qualifications. So this is a really good option. And so if you are out there thinking of buying a home, but the interest rates have you scared off, make sure you're working with a realtor and a lender that know how these work. And know how to put that into an offer. Might not be that the seller's offering it, but you might be able to offer full price with sellers giving concessions for a 2-1 buy down or something like that. So, but you got to work with a realtor that knows how that works and knows how to write that up in a contract or an offer. Anyway, I hope this information is helpful to you. Still very timely. Still seeing a lot of mortgage buy downs out there. If you did find it helpful, please let me know. I love getting feedback on my videos. And as always, love to help you or your family or friends who are buying or selling in the Central Florida area. And please subscribe to my YouTube channel. Have a great day, everybody.